Hello everyone, welcome back to my channel. In today's video, we have our guest Dr. Andy Egwim, who is the founder of Moneywise Doctor. He will help us understand the tax system and how to optimize taxes in the UK as international medical graduate as well as healthcare professionals.
Thank you for having me, Dr. Suvan. Yeah, it's been a great pleasure. I've seen the great work you're doing on your channel and how you're helping a lot of doctors and international medical graduates. So, thank you for inviting me.
Thank you for joining, Andy. For those of our viewers who are not aware of your work and seeing you for the first time, please tell us about the work you do as a part of the Moneywise Doctor.
Lovely. So I'm actually a GP. I'm a doctor. I've been a doctor for about 14 years, and I would say last seven has been in UK. But in addition to that, I'm an investor. I've been investing in the stock market since I was 19, and I also do quite a few other things like run a business. So Moneywise Doctor is basically a platform I started because we can agree, Dr. Suman, a lot of doctors don't really understand how to manage money or to make the best financial decisions. It's not what we're taught in school. We're taught to care for people and all that. So that platform, I started it to help doctors and healthcare professionals to understand how money works and to make smarter financial decisions to avoid costly mistakes.
That's great. And I can agree that there is a great need for this kind of education and this kind of a service. So today's session is about understanding UK taxes
Okay.
and as doctors in various stages of our career as well as various stages of our income slab, how can we optimize for our taxes? So Andy, for someone who's just starting out, maybe as an SHO or maybe just got some kind of a junior doctor post, earning between anything between the 12,500, which is the personal tax allowance, and to 50,000. Tell us what's the best approach for those kind of doctors to make sure that they're not paying unnecessary and extra taxes.
Excellent, lovely. I like that you broke it down that way. Basically, I think a framework I'll use would be an example I gave in our last newsletter. So, as you know, I write a weekly newsletter to doctors about money and how to make the best decisions. So, the framework we use is dividing doctors into different income groups. Obviously, in the UK, especially if you're a bit new in the UK, if you don't understand, everybody does not pay the same percentage of tax. You pay tax based on what you earn. So there's something called tax bands. So the tax band is basically a category of what you earn that affects your taxes. So for those doctors who earn the lowest grade is £0 to 12,570. There are no doctors. Most doctors earn above that in the UK, so don't worry. But that's the lowest band. For people who fall inside that band, they don't have to pay any tax on on that particular amount. It's called the personal tax allowance. So if you earn any money below 12,570, you don't have to pay any tax on that. But fortunately, unfortunately, most doctors are not going to fall into that band. They're going to fall into the next band or higher bands. So the next band basically is the band of doctors where most junior doctors will fall into, especially junior doctors who are just starting out as SHOs. And that was between £12,571 to £50,270. So, Dr. Suman, that range is called the basic rate. So that's what they're going to pay. You're going to pay the basic rate, which is 20%. So your first 12,570 is going to be tax free. But then anything in between 12,570 to 50,000 thereabout will be taxed at 20%. Happy days. But unfortunately, or fortunately, most doctors don't end up there. Hopefully, don't end up there. Like you're almost a consultant now. I would say you're a consultant because you passed all your exams, you've gotten all your CCTs. So your income keeps going up. So it's a bit like you're being punished for any more. But there are strategies to make sure that you're not the one falling under that hammer. So I'll look at the next band, which is where the next set of doctors will go to, which are usually consultants, GP, even registrars and some SHOs who do locums and earn some extra money. So you find out some registrars wonder, or some SHOs wonder, I've done so many locums and I end up with a heavy tax bill, and then they're taking less money home and they are frustrated because they've worked so hard. thinking they will end up with so much money. So I'll go to the third category. The third category is the higher rate. So that's the higher rate. So if your income is between anything between £50,271 to 125,140. So the numbers again, £50,271 to 1,200, sorry, 125,140. So if you fall into that range, anything you earn in that range is going to be taxed at 40%. So that's a higher tax band. That's where people like Dr. Suman most likely will fall in. People like us. Yeah, so but that's not all. There's still an additional tax band. There's an additional rate that's 45%. Majority of doctors are not in that range, but it's important to mention anything above £125,140 is going to be taxed at 45%. So understanding which band you are in will affect what strategy that you apply. Which band?
Okay. So we will start with the junior most doctors, and let's start with up to 50,000.
Yes, so that would be between 12,571 to 50,270. So this is the basic tax rate. I think there are a few key strategies for you at that level, things you can do to minimize your tax. We don't evade tax, but we don't pay more than we have to pay. So the number one strategy, which I see lots of junior doctors and even some senior doctors, they miss out on, is claiming tax relief on professional expenses. And what does that mean? When you're a doctor in the UK, you pay for GMC, so your General Medical Council, or even dentists pay GDC. You pay for BMA, British Medical Association. You might even pay Royal College of Physicians, Royal College of JP, whichever Royal College you are in. You're paying for your medical defense. You've got all these professional expenses. And some other people have other expenses. Maybe you have to buy an equipment, replace your stethoscope. You are entitled to claim those things back. But guess what? Nobody tells you, except maybe you come to channels like Dr. Paul's, Dr. Suman Paul's channel. But most times, your employer is not going to tell you to say, oh, you need to claim these things back. But if you don't claim it after 4 years, you have to forfeit it. And recently, as you're aware, we published a guide for people to claim step by step guide. And some people are claiming 9,000, 10,000 because for 4 years they've not claimed, they're almost £10,000. So what happens is that after anything you've not claimed, in any tax year, if you go back 4 years, that's the maximum you can claim. And most people find out a bit late. So that's the first strategies. Every year, sit down. The tax year in the UK runs from April to April. So April 6th is the beginning of the tax year to the next year, April 5. So every tax year, sit down, find out what professional expenses you've made. It might even be things like mileage, how much you spend going to other places, work related, and then apply to claim them back. You can do this by yourself. It's easy, step by step. And I'm sure Dr. Suman will share the link to how you can get a guide to do it step by step. If you struggle with it, you can even get an accountant. But most doctors are bright enough to do it step by step, and it's not that difficult. So that's the number one strategy I would say, because that's easy to do and that's quick, and you can get it back to reduce your taxes. Right. Should we look at number two?
Yes, this is a very, very important point. And the advantage is if you do it in your first year of working as a doctor, all of this get carried away. So you have to change the number from next year. But if you put 450 pound for GMC, even next year, even if you forget about it, this will be adjusted to your tax code already. So it gets
Absolutely.
carried forward.
Absolutely. It's important. The earlier, the better. If you do it early, then the next year is obviously, if it's been entered that you do that expense. What you don't want to do is forget about it. And 5 years, 6 years later, you try to go back and claim. No, you'll not be able to claim. That money is gone forever. And that could be a very costly mistake. All right.
Yeah. Okay, so that's about claiming back professional expenses. What's the next
Yes.
step?
So we're still on the same tax band, right? 12,571 to 50,270 basic rate. That's 20%. Now, the next thing you must understand that most junior doctors don't know is something called ISA. It's very simple, it's very powerful. I only stumbled upon it like maybe a few years ago, maybe was that 2017, 18, when they were relatively new. ISA is individual savings account, and what they are tax protected accounts. In the UK, tax is your biggest expense. Tax is a very big expense. If you don't think about taxes, sometimes it might even be cheaper for you to stay at home one day and look at your taxes. It might pay you more than going to work. That's my experience. But an ISA is like a tax protected account, and there are different types. I mean, we going into ISAs, obviously, we've done longer videos on this, but in a nutshell, there are four different types, and the three types affect doctors mostly. There is cash ISA, where you can save money and whatever interest you get is not taxed. In case you don't know it, interest can be taxed in the UK once you pass a certain amount of interest. So whatever savings interest you get on cash ISA, there's no tax on it. The second type of ISA is called a lifetime ISA. So if you're going to buy your first house, that's a way to get a free £1,000 from the government. If you're going to buy your first house, or for retirement, if you are saving, if you can save up to £4,000 in a year, then you can get the maximum amount the government will give you. That's 25% of whatever you saved. So for every £1 for every £4 you save, the government gives you a top up of £1. Now it doesn't mean you have to save up to 4,000, but obviously if you want to get the maximum amount of the free government bonus, 4,000 per tax year is what you can save. And unfortunately, what I've learned from my work with thousands of doctors on Moneywise Doctor is that most doctors leave it to the last minute, and then they are rushing around on April 5 trying to get it done. No. If you do it on time, and that's the best strategy if you're planning to buy your first house or if you're saving for retirement, you get the maximum. For every £4 you save, you get £1 free bonus, which you don't have to pay back and you don't pay any tax on. So that's number two, the lifetime ISA. One key thing to understand, which catches out a lot of IMG doctors, is that you can't open the lifetime ISA after you cross 40 years. So I've seen people open their lifetime ISA just a day to their 40th birthday, and you still qualify. But once you pass 40 years, that's gone forever. So I have this saying that life does not start at 40, and lifetime ISA does not start at 40. So that's a good, powerful the powerful tax saving strategy. And you can also invest the money in the ISA, or you can save it as cash. So that's number two ISA. The number three ISA is stock and shares ISA, which obviously is my favorite as an investor. The stock and shares ISA is a wrapper. Again, think of ISA as a tax protection. You can invest your money through the stock and shares ISA into the stock market, and any money you make from it is not taxed. Now, if that is not impressive to you, it's probably because you haven't been investing or you've not made a lot of money. I know Dr. Suman has been investing, so he understands what I'm saying. Now, imagine if I shared my returns, you were in my group, I shared my returns for last year, and you saw the returns on my investment is almost like 100%. Now, any money I made from that investment inside an ISA is tax free. But if I had done it outside an ISA, then I have to pay what we call capital gains tax. So any money I've made, I have to be taxed on it. And capital gains tax can go up to 24%, depending on what range you are. Even up to, it used to, I think at some point it was 28%. They keep changing it. And also, if I didn't invest through the ISA, if I get dividends, so profit from the businesses, if they pay me dividend, I have to pay taxes on it as well. So it's a really, really powerful one. Cash ISA for savings, lifetime ISA if you're thinking of buying your first house or saving for retirement, and stock and shares ISA is another powerful strategy that is really important for people earning between 12,571 to 50,000. Let's just call it the basic tax rate. So these are like some strategies.
From my own experience, I have
Yes.
used lifetime myself for my own first house
Good.
buying in the UK.
Good.
And the good thing is you can also do it for your partner. Like my wife also had a lifetime ISA in her name, and I used to put the money together, 4,000, 4,000, and get 10,000. So free money, you should always be claiming that.
That's a very
Uh,
powerful example. I think I've seen lots of couples do this as well. You put your maximum 4,000. Let's say you're saving over the next 3 years. You put 4,000 each year. You end up with, let's say, 12,000 each. That's a good 24,000, and each year you're getting the 1,000. So you're going to get a total of about 30,000 pounds as the extra free 6,000 pounds. And in UK, every little helps. Every little 1,000 you can get helps.
Yeah. Okay, that's great, Andy. So I think these are the main tax saving strategies. But the good thing is, basic rate is 20%.
Basic rate is 20%. But there are still a few other things most times that people can do. I think the one of it is pension, saving in pension, but I suspect that would more affect people who are earning a bit more. But even for you at basic rate, one thing to remember is that charity, most people don't know, if you give money to charity in the UK, it can actually affect your taxes. You can get some tax relief on it. So if you do it through a limited company, which is another aspect of tax that we can touch on, Dr. Suman. If you do it through a limited company, you can get tax relief on it. And if you also give it through whether it's your religious or charitable organization, you can save tax on those things. Yeah. So those are sort of like some general rundown.
Okay, that's great. Okay, so let's move on to the higher rate tax bracket now. 50,000 plus going up to 125,000.
Right. So this particular group, I think, needs to pay very good attention to their taxes. So if you look at the next tax band is 50,000 to 50,271 to 12,000. I keep saying 12,000. It's 125,000. No consultants will agree to work for 12,000. It's 125,140. So that's the higher rate. Now, at that rate, the starts to pinch you really, because what happens is that any income you're making, in addition to that, your salary. I'll give you a quick example. Let's say you're a consultant now, and your salary is, let's say, £100,000 per annum, and then you have a rental property, just like me. You've got rental properties, and let's say a rental property gives you an extra, just rough number, let's say 20,000, and let's say maybe you have dividends. Anything else coming that is above 50,000 is being taxed at 40%. Anything above 50,270. So that's a massive amount. So sometimes you think, well, it's almost half, because by the time you look at national insurance, which is also a type of tax that people don't think about, you might end up almost half of whatever else you're getting is going to tax. And someone will say, oh, does it mean I shouldn't then come to UK? No, I mean, like, UK is working out for many of us in a very nice way, I must say. I think we're quite fortunate. But it's all about strategy. So in this particular group, everything I've talked about for the first group, you can still apply, but there are some more extra strategies. So you still need to claim your tax relief for professional expenses. You need to be really, really serious with your ISA. Like I didn't mention, the maximum allowance for ISA in a year is £20,000. Obviously, they are planning to increase it to £25,000 now with the British ISA, which is another discussion altogether. But the maximum allowance is 20,000. So if you are at this level now, where you're in above 50,000, you want to make sure that none of your savings is outside the ISA. You want to make sure that all your savings are inside the ISA as much as possible. Your investments should be outside the ISA only if you've exceeded the ISA allowance, because at this point you might. But remember, every year you also have 20,000. Your partner could have 20,000. Your child could have junior ISA, £9,000. So there's quite a few pockets of allowance there. Yeah, but at this point, you need to start thinking about things like your pension strategy. So obviously, you have NHS pension. If you work in the NHS as a salaried doctor, good for you. You have an NHS pension, which is amazing. But the NHS pension for some people might not be enough. You might want to have an additional investment or savings so that when you retire, you have more money, or you might even want to be retiring a bit early, or you just want to have something extra. So that leads us to things like opening your private pension. So there are many examples. SIP is a common one. So self-invested personal pension, where you can actually manage the pension by yourself. Now, something really important to understand is that any money you put into that pension is tax free. So in a year, you have an allowance of £60,000. It used to be 40,000, which is still quite a big chunk, but now it's 60,000. You can put up to £60,000 into your pension in a year. I know some people will say, "Well, I don't really have that free money," but obviously, if your pension, if it's something you're planning for, then remember you can get tax relief on it, and it's also in a way I think is the most powerful tax strategy because rather than pay 40% on it, it's as if the government is putting an extra 40% on whatever money that you get. That's how I look at tax. I look at it as the government borrowing me some of their money because government is the most powerful. But if they can give you that extra money, that's powerful. So these are things to look at. Now there are a few other things obviously to look at. One, you can look at, obviously we've talked about donating to charity. You look at things like making sure that you're reviewing your tax code because this is the time that start getting confusing for most people. They don't look at their pay slips. Most doctors don't understand. You need to review your tax code to make sure you're paying the right taxes. Some people invest in an accountant doing your tax returns. You might need to at this point do what we call self-assessment. So rather than just simple tax relief, you might need to do a self-assessment to say, oh, even though I get rental property income and I get this and I get that, but I spent in this area, I spent in that area. So that tax band. But there's one more really powerful strategy that most people neglect, and I think is been quite instrumental for me, and that's using a limited company. So a lot of people they get scared, they're worried about it. Our article on using a limited company on our blog is one of the highest read articles, and because people are confused about it, we broke it down there on MoneywiseDoctor.com. So a limited company could actually be a powerful tax strategy for you. And while we may not have time to go into the nitty gritty, but I'm going to just give a rundown of it. For instance, limited company pays corporation tax, which is basically 19%. So if you earn your money as a consultant or a GP, especially if you're outside what we call IRO 35, so it means you can work independently and all that good stuff, then you can pay through your company limited company corporation tax of 19%. Obviously, above 50,000 profit and all that, then it goes up to 25%, which is still better than 40%. And obviously, with limited company, if you earn dividend through it, then you're going to pay dividend tax and all that. So it's structuring it properly. So using a limited company, I'll tell you some benefits. For instance, if you were to pay money directly from your limited company into your private pension, that's obviously direct tax relief. So it's counted as an expense. Now, life insurance, income protection, critical illness, and all that, you can pay through your limited company, which I did, and that will be counted as what we call key man insurance, and that's tax relief. You get tax relief on it as well. So there's quite a few things. For instance, if you run a limited company, you can decide to hire a staff. It could be your your wife or cousin or someone who can work as an admin for you, or you might do interviews. It doesn't have to be a relative, but basically if you pay them like 12,571, they fall under the tax threshold, so that means there's no taxes on that. So limited company gives you a lot of flexibility, gives you so many things to do. But one thing I tend to suggest is that if you must go that route, work with an accountant, work with a qualified specialist accountant. I work with specialist accountant that understand how to deal with doctors' finance, and that's part of what we do on Moneywise Doctor, basically screening accountants that fall into that category. Yeah, so that's just a rough idea. There's more, but uh, I'd like to hear what you think about the strategies.
Yeah, so the simple understanding is if you are a hospital doctor getting a salary, no
Hmm.
other source of income like property or anything else,
Hmm.
you can still do away with without an accountant at this
Yes,
level.
yes, yes.
But anything extra source of income, owning property, owning a business, anything to do with limited company, you need a specialist accountant at this stage.
Absolutely, absolutely. I think that's a beautiful way to sum it up. That's why your YouTube videos are so good because you can sum things up quite simply. Now, there's something quite critical that people like you now, also consultant and many GPs fall into called the 60% tax trap. I don't think we'll be able to conclude any discussion on tax without talking about the 60% tax trap. Even though everything we discuss is high level, there's much more when it comes to taxes. Obviously, you know about most people coming to the UK, or maybe people who are already in the UK, there's council tax and there are other sorts of taxes, and you're paying VAT. You buy a new, there's all sorts of taxes. So let's not get into those ones. Let's focus on taxes as relates to doctors. Now, 60% tax trap is quite simple. It's just basically a tax that is never advertised. You can see when I talked about the different tax bands, we talked about 0, 20%, 40%, 45%. But actually, some people are paying an effective tax rate of 60% because you lose that your 0 to £12,570 once you cross a certain income threshold. So if your income goes up to 100,000, so once you get to that 100,000, you start losing that tax allowance. So for every £2 you make above that 100,000, you lose £1 of your tax allowance for every £2 you make. So by the time you keep going up and you hit 12,000, sorry, I keep saying 12,000 again, 1,000, 125,140. Yeah, I don't think any consultants will work for 12,000, but the figures 125,140. So 125,140. Once by the time you get to that amount, you would have lost all that 12,570, that tax allowance. So effectively, you've lost that tax allowance. You are now paying taxes on all your income, and that effectively is 60% tax trap that we talk about. So that's why it's even more important for consultants, GPs, or even registrars or SHOs that do locum or have additional sources of income. Maybe they have a business, they have dividends, they have several side hustles. That's why it's really important for them to have a clear tax strategy to avoid falling into that trap. Because what will happen is that if you apply all these different strategies and you're able to reduce your tax, if you're gifting wisely, you're using your ISAs, you're paying into your pension, you're claiming money from your life insurance, and you're using maybe a limited company if it's appropriate, yeah. If you apply those combination of strategies, you reduce your taxable income, and that might help you not to fall into that 60% tax trap.
Really good explanation. So basically, either you want 99,999 or you want 125,100 or something. So
Yes.
don't earn anything in between.
Yes.
Uh,
So that's why sometimes people earn more money and then they wonder why they're getting less money and they get really upset. And being in forums where doctors are really, really angry because they're confused, they didn't understand the system. But nobody teaches this, nobody explains this things. That's part of why we exist. That's why MoneywiseDoctor.com exists, to help doctors figure out these things.
that's right. And another painful situation is, I mean, me and Andy, we are almost in the same situation. We have young children at home.
Yes.
So you lose your childcare benefits as well once you cross that 100,000. So
That
that's a
that
different topic. We
That,
won't go too
that's
much into detail.
that topic is going to lead to a riot, Dr. Paul. It's a very charged topic. People have been campaigning about it, but that's really important. Child tax benefits you also lose. Yeah, so it's very, very important to understand the taxes basically. Because I say to people that if you take out one day in a year, even 2 days in a year to work on your taxes, to think about or even read an article, or even attend a course, or even speak to an accountant, that might be your most profitable day in the year. Like even if you take annual leave to look at your taxes, it might be your most profitable day. But you don't need annual leave. Basically, all you need to do is follow the right podcasts, YouTubes, look at blogs, and you don't need to spend the whole day. It's just to keep updated on all these things. Yeah.
Great. Okay, so we have talked about this high rate tax ban now. Now let's move on to the rich doctors amongst us. Anyone earning more than £125,000 in a year.
Right. The funny thing is, I think that 125,000. I think the actual amount is 125,140. That's the additional band. I actually feel that those people in that band seem to have gotten off lightly compared to those between 50,000 and you know 125,000, because you've gone from 20%, 0 to 20 to 40, then 45. I'm not thinking they should be taxed more, obviously. I think I'm in that band. But basically, what what will happen is that if your income goes above 125,140, at that point you've already lost all your personal allowance. You've already lost that 12,570. But anything you earn above that amount, above 125,000, will be taxed at 45%. If your income is in that range, I think the best thing you can do is to work with a specialist accountant, a specialist medical accountant. An accountant, it doesn't need to be a fancy title. If you have an accountant who works with doctors, for instance, a lot of the accountants who sort of like help doctors on MoneywiseDoctor.com, they've been working with doctors, hundreds, thousands of doctors for years. So they understand how your income works, they understand how the system works, and more importantly, they work with doctors that have given them good reviews and basically they are qualified. If your income is above 125,000, at that point you can't really take any chances. You need to do things like self-assessment. You can do it by yourself. Actually, I've helped like colleagues do their self-assessment, walk through the process, not doing it for them like an accountant, but showing them step by step, this is how I do it. I didn't like it because it took me quite a lot of time, and time is money basically. Yeah, so an accountant, I think, is cheaper I don't know, different accountants charge different things, but every year you do that self-assessment and you get your returns. But you don't necessarily have to do an accountant. You can watch videos online and do your self assessment. So, self assessment is basically you're reporting your income. For any doctor earning above 100,000, most likely you have to do a self assessment. So, you're reporting your income, and that's an opportunity to also report expenses and things you can claim. Obviously, if you've given the charity, that's an opportunity to claim it at that point. If you've bought equipment, you can also claim it at that point. So, pension and all sorts of things. I mean, there are multiple things to claim, but a lot of it might be specific to your work or that particular tax year. That's where the value, I don't know, I think the value of an accountant, I've had to hire professional, just like a doctor, you're a specialist in your area, you're a professional. So hiring a lawyer, professional to like an accountant to give you an advice, you could actually, I look at it like you put £200 to an accountant and they can save you 2,000. I'll take that deal any day. Yeah. So above 125,000 self assessment.
Yeah. For the self assessment, I filed my first self assessment in the last tax year.
Okay.
It was a new experience for me. Now, the accountants I contacted, they all charge 200 to 250 pound.
200 to 250. That's what
Yeah.
my charges. And I have
And
accountancy bills for my companies as well.
the problem with me was that my whole income in the year. So the reason I was doing for my YouTube channel income. So I
Yes.
crossed the 1,000 pound threshold of profit, and
Yes.
that's why I was doing it. Nothing to do
Yes.
with my salary.
What's your side
So
hustle? What's your side hustle is
side
above
hustle.
1,000 then?
Now for a 1,000 pound profit, I can't pay 250 pound
Oh no, no,
to the
no. That's
accountant
that's
fee.
too much. That's too much.
That's too
If
much.
I crossed, I had to be doing self-assessment very early, even as a junior doctor, because I had babybumper.com and some other businesses, and I had the dividends and then rental income. So what I did is that I had an accountant very early on. But if I were in your position, like 1,000, 250 is quite a lot to pay for 1,000. So what I would have done in your position, Dr. Suman, as a YouTuber, you've got over 14,000 subscribers now. What you do is that you do the self-assessment, record it, and then it becomes content for your YouTube. That way, maybe you can make back the money that to pay for the time that you used to do the self-assessment. But you don't want to make a mistake with it because HMRC, they're not very forgiving. um,
Hmm.
they're not very forgiving. If you make a mistake or you file late, there are penalties and all that. And I do have accounting for my business and I have for my person and all those things. I have to file them on time, obviously with
Mm-hmm.
the help of my accountants and all that. But if you file it, you get a fine. And if you make a mistake, you get a fine. If they make a mistake, they claim, I don't know if they will agree that they make mistakes. They don't get fined. They don't get fined.
Even then, we get fined.
We get fined. I've got a
Yeah.
colleague, ST7 now, gynecology, very senior. He ended up with £20,000 tax bill from HMR, extra tax bill. it was a big shock. I think it was 22,000 or thereabouts, the gynecology SHO, an IMG. Because when he was an SHO, he was doing several locums, he was doing all sorts of stuff. He wasn't seeing his tax code, or maybe he wasn't looking at his pay slip. He thought that whoever they were deducting the money and all that, and he worked in different trusts. And at some point, I think he did a self-assessment and tried to claim back some money, and then they said, no, 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 no. Actually, you are owing us a lot of money. At that point, it was a very difficult time for him because he was moving house, he was expecting a baby, so many things happening. So he had to go into a payment plan with HMRC. I think he had to go into a payment plan. I think he's still paying the bill now, but he had to pay it on monthly basis. So that is why when it comes to taxes, you want to be really careful, really. I mean, there are other taxes
Yeah.
that we don't have time to go into, like stamp duty, land tax. I think I paid anytime
Mm.
I buy another house, I have to pay. Last time I paid 10,000, 11,000 pounds of stamp duty land tax out of my pocket, and well, you might call that a rich tax, but well, we've already paid tax on the initial income. Yeah. But very
Yeah.
important taxes. I'm very glad that you brought up this topic because that's an area where doctors in general and IMGs in particular tend to make very huge, costly financial mistakes that eventually become like a rope around the neck.
Thank you, Andy, for such insightful discussion. And I would request all our viewers to visit Moneywise Doctor and follow Andy's newsletter to learn from his wisdom. Um, any parting thoughts, Andy?
No, no, actually, I think it's been a fantastic discussion, and I'll part with a quote from Benjamin Franklin, who was one of the founding fathers of United States of America, and also a very wise author. He said, and I'll paraphrase this. He said, "In life, nothing is certain except death and taxes. So you can be sure that you're going to die one day. We're all going to die one day, and can be sure that you pay taxes. So these are all non-avoidable things. So knowing that as a doctor or healthcare professional is really very important that you pay very close attention. It doesn't mean you have to do it every day, but at least once a year, pay close attention to your taxes and seek out strategies to make the best strategy. And of course, if you want a free step-by-step guide, I'm sure Dr. Suma will put up a link where you can download our free step-by-step guide with screenshots and everything of how you can claim back your professional tax relief. I don't believe there's any guide like that currently online in video form that can walk you through the steps, but that can help you. And if you can claim back £9,000, maybe you should donate some money to Dr. Suman's. He's working really hard. Buy him a coffee if you can claim £9,000 with that information. Maybe buy him a coffee on his YouTube channel. I think he deserves it.
Yeah, you can do the super thanks button, and
Oh,
me
it's
and
super
Andy can share
thanks.
that.
All right, good. All right, thank
Okay,
you so much.
thank you, Andy. And I will definitely put out all the relevant links in the description box below. Please do check them out, and hopefully we'll have another session with Andy and learn from his experiences. Thank you for joining.
Thank you so much. Cheers. Bye bye.